Here are 40 must-know facts to pass the property and casualty insurance exam. Grab this as a free cheat sheet, just search PrepPass.org. Let's go. Part A of the personal auto policy is liability coverage. On the Business Auto Coverage Form, CA0001, Symbol 1 means any auto. California Insurance Code Section 663 requires at least 20 days written notice before non-renewal of a personal auto policy. Vehicle Code Section 16020 requires drivers to carry written evidence of financial responsibility. Intentional acts are excluded under Part A. The policy responds only to accidental loss. Part A defines bodily injury as bodily harm, sickness or disease, including death resulting from any of these. Section 31 defines an insurance agent as a person authorized to transact insurance on behalf of an insurer. Section 12921 charges the Commissioner with executing and enforcing the insurance code and adopting reasonable regulations. Section 250 and Section 280 provide that insurable interest in property must exist at the time of loss. Section 1633 provides that producer licenses are issued for a 2-year term and must be renewed before expiration. Section 1724.5 requires a licensee to file a notice of change of address with the Commissioner within 30 days. Section 1879.5 grants insurers civil immunity for good faith reports of suspected fraud to authorized agencies. Proposition 103, codified at Cal. 10 CCR Section 2695.7, b, gives the insurer 40 calendar days from receipt of proof of claim to accept or deny in whole or in part. The California Fair Plan Association, created under Cal. The CEA, established under Cal. Negligence requires 1. Duty, 2. Breach, 3. Proximate, legal, cause, and 4. Actual damages. California follows pure comparative negligence under Lee v. The standard CGL has 3 coverages. Each individual occurrence is capped by the each occurrence limit, $1 million. $600,000 is well within that. Coverage C, medical payments, is a no-fault, goodwill coverage. California generally bars dram shop suits, Cal. The special form is the broadest of the 3 standard causes of loss forms. The co-insurance formula is, did carry/should have carried, X loss. The agreed value option suspends the co-insurance clause for the policy term. BOPs are designed for small to mid-sized risks such as small retail stores, offices, and small habitational risks. The builder's risk coverage form is specifically designed for buildings or structures under construction. Co-insurance requires the insured to carry at least the required percentage of value. The false statement is that ocean marine policies are designed for land-based commercial buildings. The DP1 basic form settles losses on an actual cash value, ACV, basis, meaning replacement cost minus depreciation. Standard dwelling policies do not list theft as a covered peril. Personal property under all DP forms is settled at actual cash value, ACV, which is replacement cost minus depreciation. The HO4, often called the renter's or tenant's form, is built specifically for someone who does not own the building. The HO5 comprehensive form is the broadest unendorsed homeowner's contract sold in the United States. The HO6 is the condo unit owner's form. The HO8 modified coverage form is designed for older or historic homes whose replacement cost greatly exceeds market value. Other structures, coverage B, is automatically provided at 10% of coverage A on the standard ISO HO3. Personal property, coverage C, is automatically set at 50% of coverage A on the standard owner-occupied HO3. California Insurance Code Section 675.1 imposes a 1-year moratorium following a declared wildfire emergency. Adding a scheduled personal property endorsement, also called a personal articles floater, is the right answer. Want all 40 on one page? Grab the free property and casualty insurance cheat sheet and the full practice test. Search PrepPass.org. Good luck on your exam.